Right, if you run a small or medium-sized business here in the UK, you're going to want to listen up. The year 2026 is shaping up to be a really big deal. One of the biggest shifts in costs and just, well, how we do things in a generation. So we're going to break down exactly what's coming your way and, more importantly, what you can actually do about it. Okay, let's get into it.
So this is the big question, isn't it? Is your business actually ready? Because, and I can't stress this enough, we're not just talking about a few little tweaks here and there. This is a fundamental change in how you and your business are going to interact with HMRC. So let's find out what you really need to know.
And listen, if this all sounds a bit daunting, you are definitely not alone. The first big wave of these changes, especially the part about digital tax filing, is going to directly hit almost 800,000 small business owners and sole traders. That's a huge number, and just understanding the sheer scale of this is step one to getting ready. So what exactly is this shakeup? Well, to put it simply, the government is moving away from that old-school once-a-year tax return. Instead, they're moving toward what you might call a real-time digital relationship with HMRC. And what that means for you is more frequent reporting and a much bigger need for good digital system.
The biggest thing driving this whole change is an initiative called Making Tax Digital, or you'll see it as MTD. Honestly, the best way to think about it is that HMRC is becoming your new digital landlord. They're going to want regular updates on how your business is doing financially. So let's unpack what that really means in practice.
Right. The most important thing to get your head around is that MTD is not optional. This is a government mandate. It means you are required to keep all your business records digitally, and you have to use specific HMRC-approved software to send in your tax info all year round. And here's what your new routine is going to look like. So say goodbye to that one big annual tax return. Instead, you've got to keep your digital records up to date constantly. Then, every quarter, you send a summary of your income and expenses to HMRC. And finally, at the end of the year, you file a final statement to kind of square everything up.
Now you're probably asking, does this actually apply to me? Well, here's the deal. Starting April 6, 2026, MTD is mandatory for all sole traders and landlords who have a gross income of over £50,000. And notice, that's gross income, your turnover, not your profit. That is a really key distinction. So if that's you, yeah, the clock is officially ticking.
All right, so let's move on because beyond all the new admin, the actual cost of doing business is set to go up. And a lot of this is happening through something people are calling stealth taxes.
So what on earth is a stealth tax? Well, it's when the big headline tax rates stay the same, so it looks like nothing's changed, but the government freezes the income thresholds. So as things like inflation and wages go up, more and more of your income and your employee's income gets pushed into a higher tax bracket. You end up paying more tax without any rates officially going up. Sneaky, right?
And this has a direct knock-on effect on your payroll. You can see it right here. You give an employee a well-deserved pay rise, but a bigger chunk of it gets eaten by tax because of these frozen bands. This creates wage pressure. They might ask for bigger raises just to compensate. And at the same time, it increases your bill for employers' national insurance. It's a real double whammy.
And it doesn't stop there, I'm afraid. Other costs are creeping up too. We're looking at a revaluation of business rates, which could easily hike up your property costs. If you invest in equipment, the tax relief you can claim over time, the writing down allowance, is being reduced. And, oh yeah, if you're late filing your corporation tax, the penalties for that are getting much, much steeper.
Okay, so we've covered new admin and rising operational costs. But what about you, the actual business owner? I'm sorry to say, the way you take money out of your own business, yeah, that's getting more expensive too.
Let's just compare the two main options. You could pay yourself a salary, but then you're getting hit by those same frozen tax thresholds we just talked about. Or you could do what lots of small business owners do and take dividends. Well, the tax rates on those are set to jump by 2 percentage points from April 2026, making that whole strategy a lot less tax efficient than it used to be.
And what if your exit plan is to sell the business? The changes here are frankly dramatic. This quote just says it all. A £1 million gain from selling your business will now cost you £180,000 in tax. That's £80,000 more than it would have just a couple of years ago. I mean, that is a staggering increase.
So to be super specific, the capital gains tax rate for most qualifying business sales, it's something called business asset disposal relief, is jumping to 18%. And that kicks in on April 6, 2026. So you can see how timing suddenly becomes absolutely critical if you're even thinking about an exit.
Finally, let's zoom out and talk about the long-term view. For so many family-run businesses, passing it on to the next generation is the ultimate goal, right? It's your legacy. But new inheritance tax rules are making that a whole lot more complicated.
So, it used to be that many business assets could be passed on with 100% tax relief, which was a huge help. Now, that 100% relief is being capped. It's a combined cap of £1 million for both business and agricultural property. And for many successful businesses that have been around for a long time, their value is going to be way over that £1 million mark.
And the consequence of going over that cap is pretty clear. Any value above that £1 million only gets 50% relief. This means the rest gets slapped with a 20% inheritance tax charge. This could literally force families to sell off parts of the business they've built just to pay the tax bill. It's a real threat to that legacy.
Okay, deep breath. I know that was a lot to take in. We've gone through digital reporting, rising costs, and hits to your personal finances. But it is not all doom and gloom, I promise. Now we get to the most important part, your action plan. Here are 4 key areas you need to be looking at in your business, like right now. First up, admin. Just don't wait until the last minute. Get your business onto some MTD-compatible software, like Xero or QuickBooks, well before that April deadline. Just get it done. Next, your pricing. With all these costs going up, you absolutely have to review your margins to protect your profit. Then there's the legal side. Get a meeting in the diary to review your will and your business structure to plan for these new inheritance tax rules. And finally, strategy. If selling the business is even a tiny thought in the back of your mind, you need to have a serious conversation with your accountant about timing. Acting before April 2026 could save you a really significant amount of money.
Look, the landscape is changing for UK businesses. There is no doubt about it. Preparation isn't just a nice-to-have anymore. It is absolutely essential for survival and for success. So, looking at this plan, the final question is really for you. Which one of these actions are you going to take first?